These are the famous Heikin Ashi candlesticks. Professional traders usually use them to detect trends, ranges, and structures in a much simpler way visually, but their usefulness does not end there. There are many strategies that combine indicators created for Heikin Ashi candles with charts based on structures and normal candles. Today we are going to show you step by step how to use one of those indicators that will improve the win rate of your trading. Welcome to the Trader's Game. And before we start, remember that in the description you have the links to join us in our Telegram community, where every day we post charts and analysis of what is happening in the financial markets. And also the trading bonus page, which has been updated and have added new promotions and free bonuses for all those who are starting in the world of trading. Do not forget to leave your email if you want to receive a weekly newsletter with everything that has happened during those days. In this occasion, the first thing we have to do is to go to the part of indicators, and we look for the smoothed Heikin Ashi candles created by Jack VMK. We click and it will appear something like this. We go straight to configuration, and in style we are going to lower the opacity completely to 0, both of the wick option and of the border option, since they do not interest us, because we only need those red and green signals. In the other part of data entries, by default we put 10 and 10. This we will change it to 20 and 20, and now you will see why. When we use this indicator in higher time frames, we always have to try to upload this data to give us the best possible information. You can already see how these Heikin Ashi candlesticks act as if they were a typical average, but tighter and giving us much more information. You can see how even at this point, through all this downtrend, at no time this indicator has indicated us a possible reversal until this point, and as you can see, having a lot of effectiveness, because just here the trend has changed and we were able to take advantage of all that movement. But let's learn a little more about its basic operation and how we can use it to operate. It is clear that the most normal thing is to take advantage of these bounces to the average to seek operations in favor of the trend. For example, in this case, looking for operations in short, since we are in a clear downtrend, we can see how this movement comes into contact in that average, and we could perfectly look for an operation of continuation of that trend. We would do it using some of our basic knowledge about trading. We could mark this area as key support of the structure that was formed just above, and that in turn, when the price was below, acted as important resistance. Then if the movement crosses it completely down and we are in the middle of a downtrend, at the moment we see that the price starts to bounce and we have that reversal Heikin Ashi candlestick formation. That is a doji style candle, and then a completely bearish candle without any wick on the upside, and also coming from a bounce off the downside of an area that would now act as resistance. We would simply have to place the stop loss above the previous highs and look for our trade. You could even extend the stop loss to the top of that complete resistance area, also extending your profit taking. And as you can see, the price bounces back and continues to fall, giving us even more profits. For strategies with this indicator, I personally use the operating ratio of 2 to 1, i.e. for every 1% we have of stop loss, we will have a 2% of take profit, although as you can see we could also let our operation run until we already had a complete break of the average candlestick Heikin Ashi, i.e. taking profits, for example in this green candle here, as you can see that it closed at the top. Undoubtedly, this is one of the most profitable strategies when it comes to obtaining information and to combine with basic knowledge of trading and in particular of price action. But this does not end here, but it is highly recommended to use two of these averages with different data to have information in different temporalities. If the first one we put in 2020, the second one we will put in 88, we go back to style and place all this in the same way as before, and we would have something like this. Why do we use these two averages just with these data? Because this way we will have even more information. That is to say, we have the outer mean based on data from higher temporalities and the inner mean based on smaller temporalities. That gives us much more information that we can use, for example, in an area like this, where the price does seem to want to reverse that trend and green candles start to appear. However, the price is not able to overcome the long-term average. Then we detect this great rejection right in that average, and we can interpret that the price can continue to go down. We could even enter right in this candle that goes back through and get below, or also in this one where again for the first time a red signal reappears after these green signals. That great rebound occurs, and we can enter at the close of that candle in a similar way to the previous one, 2-to-1 ratio. And as you see, we continue to take profits. This is a complete joy for all those of you who use trend-based trading, because at the moment we confirm that reversal in both averages, both in the long and short term. That is right at this point. We are already prepared to wait for one of those bounces and enter right at those points, looking for that bullish continuation. In fact, you can see how here again we have those two candles, those two kind of reversal dojis, and the next candle is already the one we expected, positive, after a bounce with both averages in a bullish direction, and without any kind of wick in this case below. We place our stop loss and put that ratio of 2-to-1, just here we would take profits, but of course, as I said, we can simply let those profits run until we have an opposite candle crossing that average, or we can even wait for a red signal to appear on our indicator. As you can see, this last example we have done it in 1 hour time frame, so you can see how well it works also in lower time frames. I hope you adapt it to your knowledge, to your strategies, and that you tell us in the comments below what you think. As I said before, this is a set of indicators that have been used for many years and have always helped both professional traders and beginners thanks to its simplicity to get better results. As always, thank you for watching, and do not forget to stop by the description, where you always have links to our free Telegram community and the Trading Bonus website, where you can find the best platforms to get started in the world of trading, and also accompanied by a welcome bonus that you can take advantage of completely free. See you in the next video of the Trader's Game.